Okay, how's everybody doing? Welcome back to the House of Business Podcast 2.0. It's your host, Caleb Thompson. Hope everyone's having a great day today. This is going to be a good one for you. This episode is called Funding 101, and this is bootstrapping versus venture capital. And this is for startup companies. And, I personally will go with bootstrapping because, venture capitalism or dealing with the venture capital, even though they do take equity for their investment. Well, you know what? Let's start over. Okay, this is the House of Business Podcast 2.0. This is your host, Caleb Thompson. This is the place where we give you the knowledge and the tools to execute your dreams and visions. And this is Funding 101, like we said, like I discussed. And let's start off by helping you guys to understand what bootstrapping and venture capital is first before we move forward. I know there are a lot of people that watch this channel. They are, they've been in business for years. And this, like I said, this channel was originally started for business owners, small business owners, or those who had a dream. They didn't really know how to go into business, how to make that dream come into fruition. And that's why we're here, So first off, funding. Okay, once you start a business, let's say you start you have a dream. You have this dream, you pick out, you know exactly what you want to do. It always starts with an idea. What kind of services do you want to start? What kind of products do you want to sell? What kind of services do you want to, have available, to the world, to the public, to your neighborhood, your area that you're in, and according to your ability. And a lot of times you can start off with a dream and with an idea, and you can pick up on the skill set as you go along. But that passion of wanting to do it, as long as you continue to be resilient and pursue that passion, you will start to gain everything that it's a faith walk. So the more that you start to move towards your dream, you will start to pick up skills. You will start to understand certain skill sets, certain mindsets, certain particular characteristics about yourself that needs to be modified or customized to be that person that you need to be to operate and run and operate that business from a owner perspective and from an owner standpoint. Not meaning as a worker, but not as just a worker or a manager, but as a business owner, the one that puts these operations in place, that hires staff. You have to be familiar with all of that. But let's stay on topic. Bootstrapping. Bootstrapping is basically you yourself funding a business using your personal savings, let's say, or reinvesting profits, and you're basically relying on minimum outside investment. This helps entrepreneurs to, maintain full control of, it doesn't matter how slow your business is growing, but you have full control of your business and the pace. You might often grow at a slower pace because you don't really have if someone just gave you an investment, you may be able to get a nice venue, a nice building. You may be able to buy that building too as well. You may be able to get you a nice location, all of your products. You can have all your services. See, when I started my restaurant company, we just had catering at first. We didn't have an in-house restaurant run. We just had catering. But as I started to move towards that goal, God just started to bless me. I say God because these things didn't just come out of nowhere, and I didn't steal the concept or get a prototype from another company. These are ideas that organically came to me. So that's why I say God there. If anyone gets that confused, I don't want to take the credit for something that, I know that, I'm not that smart. But all of these amazing ideas of creativity started to come on how to expand the business using different departments, and also how to use those different departments as a fail-safe for the entire business. So if one area of business isn't just say operating to a high caliber where we're generating a lot of capital in that particular department, maybe another department, you know what I mean? We will be marketing all areas all at the same time. Maybe another department that's more trendy or more in season. We have a wedding catering. Maybe that's more trendy around this time or around this season. and has wedding packages. Then corporate catering. Maybe in the wintertime, not everyone wants corporate catering, but they want. Some people have weddings towards the fall, especially and towards the beginning of the year as well, and springtime as well. So that department can compensate for the lack of say customers or the lack of capital in that particular area. Let's just say that the lack of me being able to generate capital in that particular area, that certain department, it's slow. It's not fast paced. It's not generating at a fast pace. So this other department is acting as a fail safe to keep the entire company running. We just don't have one thing that we're focused on, and once that one thing for our in-house services they fail, the entire business is crumbling. We have to create a fail safe and offer different things from different departments and try to find a way to integrate those into our other companies as well. But bootstrapping is for just funding the business, use your own personal savings, you know what I mean, reinvested in profits from the company. Venture capital is it's basically from an investor or an investment firm. So basically from an investor or investor firm. And what they do is they give you a certain amount of finance. They help to fund your business, but they take a equity out of it. They take a certain amount of equity. So we say, you ever seen Shark Tank? It'd be like 300,000 for 20%, or just depending on how much. And venture capitalists really do not work with small business owners unless you have generated enough capital to show that your business is profitable enough to invest in. I just dealt with a venture capitalist that has, easily. One small business has 500K cash flow 500K easy in one location. So, and they wanted to invest. I have this amount of money, I want to invest, but they need to see your W-2s. They need to see those profit and loss statements. They need to know that they will get a good return on investment if they invest in your company. A lot of venture capitalists, some will, don't get me wrong, some of them will be there and kind of micromanage, not really micromanage, but they will take their expertise. They will kind of be a mentor to you in that business. A lot of venture capitalists do not, they don't invest in a business that they're really not knowledgeable in. So it's just like stocks. You wouldn't invest in the stocks unless you're knowledgeable about that particular stock or about stocks in particular. So, it's the same way with venture capitalists. You may have a venture capital firm, and it may consist of, let's say, 10 people, maybe less, some less, but 10 people. And what they do is they put all their money into different businesses, and then they take dividends out of those businesses they had, however they do it. I don't know certain foundational operational strategies or how they will structure their venture capital business. I know how I would structure mine, but I wouldn't have 10 people. I wouldn't have that many people. We don't need that many people to be successful, I think. But anyways, well, they would give you a certain amount of finance or funding for a particular percentage of equity out of that company. So just have your ducks in a row when you're dealing with a venture capital firm or venture capitalist. Have your ducks in a row. Have those profit and loss statements show that you're having a good return. You have a profitable business. Let's just say that. But you gain, as an entrepreneur, you will gain access to a large sum of money, mentorship, and networking opportunities. But you will have to give up partial control and always face the pressures of growth and return. So you'll always be under the gun of growth and return. So I always happen to push the bar, which you should do anyways. It's your business, but it won't be from you doing it from a passionate standpoint of you should always want to grow and scale your business, but it wouldn't be from passion. It would be more of, I hate to say this, guys. I said oppression, but I hate to say oppression. But it would be more of I'm under the gun type of attitude that for sure that you're working with someone else's money. Okay, so that is the difference between bootstrapping and venture capital. So that is something that you guys can kind of look into. This is Funding 101. This is the House of Business Podcast 2.0. This is your host, Caleb Thompson. I want to go more into depth at a later time. We'll talk about growth and scalability, because your growth depends on reinvesting those profits when you're bootstrapping. But it limits, that hiring, marketing, and scaling operations. It kind of limits that when you're bootstrapping, because you're running, operating a business off of your savings, your profits that you're reinvesting back into the company. It just depends on your brand awareness, for one, so you can draw in those customers or those clients. It has many different aspects of your pricing strategy, your target market strategy, market segmentation. All these things need to be executed almost in a precise manner when you're first starting your startup, so you can draw those clients and those customers in with those particular services and products that you sell. And also, mentorship is good, but a lot of times before you start a business, try to already kind of, let's say, verify or get validation from the marketplace. What I mean is this: already start doing hair on the side, with your regular job before you go full-time business. Already have a small concession stand that you sell your number one product that you sell, or go to carnivals with your food truck, your small little food truck, small vending truck, before you turn it into a full-time business. Use your business as a side hustle first to validate if it's room in the marketplace for your business. There's room in the marketplace, but there may not be room in the marketplace, the business marketplace in your location or in your area. You may have to go to a town over, to a county over, for your business to thrive. So that's the why you need to get validation from the marketplace when you launch your company. But that's so those two bootstrapping, venture capital, my personal favorite. I like bootstrapping. It takes a lot longer for you to scale your business unless you find a mentor, or you find someone that has a pattern that has been tried, tested, and you can apply that pattern or that strategy to your business, and they can help you to learn how to apply that to every company or every department to help your business scale. So it is good for mentorship, but this is the last thing I'm going to say. There's always going to be risk and financial pressure, even with bootstrapping. The risk is more personal. You as a founder, you invest your own savings, so or take on your own personal debt. But there's lower financial pressure since there are no investor deadlines. You don't have to. If we took a loan, we'd take $2.5 million at 2.5%. Over a course of 10 years, 2.5% annual over a course of 10 years. But that puts pressure and deadlines on paying that money back within the 10 years, and at a 2.5% rate every year tacked on to what we owe. So that puts pressure on you. But with this, the risk and financial pressure with bootstrapping is that the failure, it just affects you mainly as the founder. You know what I mean? It just affects your finances and not the outside investors. But with venture capital, the risk and financial pressure that you'll have to go through, you have to be you're pressured to deliver high returns on a set time frame. Usually 5 to 7 years, maybe 10 years, 15 years, depends on the amount, the investment amount. Some can go all the way up to 20 years, just depends on the firm or who you're dealing with, your investor. And you have a higher likelihood of being pushed toward a exit strategy, like an IPO or acquisition. I hate to say that, but that is some information that you need. That is very vital when you go into get investments from these venture capital firms, and you have a risk of losing your company vision in pursuit of investor demands. That's another one that's real big. You can almost lose your company's vision just trying to get the money to pay these people back. Like I said before, you will go from being passionate about business and how you will expand and customer service to more of You created another boss. You were the boss and you were the founder. You had the vision. You had people working for you. You want to work this vision. But now you have put yourself in such a bind that you have created a owner for the owner, So you guys, just be careful about that. Use discernment. You guys can give me a call. Mason the Fez Incorporated, which is the house of business, is just in French. We named it that because we started that business remotely for a company there. I don't know if that's one of them, but. So we started that company remotely to help business owners there, and that's why it's named that. I don't necessarily know how to pronounce it that good, but the House of Business. We will leave you guys an update. But contact us, man. We have 30-minute free consultation to see how we can help small business owners internationally. And also check out World Changers. World Changers LLC is also a business company that helps people internationally to get LLCs here in the United States. So if you're in Jamaica, if you're in the Philippines, if you are in Indonesia, if you're in India, if you are anywhere, the World Changers Society LLC, the World Changers, it's ran by a woman named Trishana Connolly. So if Trishana Connolly from Jamaica. So you guys go and check that out. World Changers LLC. She's also she's a Christian business owner. She's also a great woman of God. You guys go and check that out. She can help you establish a business here in the United States. It also comes with the business plan, the minutes, the articles of organization, the everything that you need. I'm sorry, guys. I have another podcast after that, so I do a lot of things at once. So I'm thinking about what I'm going to do on that podcast as well, and I'm also recording this right now, and I'm thinking about tomorrow marketing strategy for tomorrow to draw in customers. So man, don't mind me, but I hope you guys really enjoyed this podcast. I hope you guys really listen to and make a decision if you want to do bootstrapping or if you want to go with a venture capital firm, and maybe we'll make a part 2 and I can teach you a strategy on how to bootstrap and on how to draw in investors from venture capital. Number one is you will need to be in business at least 2 years, and that's for anything. You want to get a loan for anything, you have to build that business credit, and you have to show in your profit and loss statements, and some you have to have the W-2s, the tax forms for those 2 years and how much money you generated within those 2 years. All of your profit and loss statements monthly. It doesn't have to be. You can do profit and loss statements for every week, every 2 weeks, bi-weekly, monthly, every 3 months. But I would do monthly, and I would do bi-weekly and monthly. Bi-weekly for my own personal comfort, and monthly for the company and the team of the company. But whatever suits you best. But that's what you would probably need to deal with a venture capital firm. And it puts a lot of pressure on you. So we went over the risk and all those things. So you guys can make the decision yourself. If you need more information, you guys can find me at Facebook at Caleb Thompson. On Facebook, Instagram, it will be CEO _Caleb, CALEB _Thompson. You guys can find me there. Hit me up, man. Hit me up, message me, and let's get you guys moving. Let's get your companies up and running and scaling from an authentic and organic standpoint in organic traffic flow. Peace.